How's everyone doing today? I hope you're ready to dive into an engaging one-on-one teaching session with a Discord member who graciously allowed me to share our conversation. In this video, I'll be breaking down the turtle soup strategy in detail along with my personalized one-on-one slide that encompasses every aspect of trading both on and off the charts. This session is ideal for both beginners and experienced traders alike, offering valuable insight into how I mentor individuals at experience levels, whether you're just getting started or already well versed in trading. If you're new to the channel, please remember to like the video and subscribe for more expert trading insight. And if you're interested in learning more or joining the community, check out the link in the description. Let's go ahead and get started. Yeah, like all of these notes are really good just to keep in mind, right? Same thing as like a high probability order block, looking for us to sweep a level of liquidity, whether it's like an Asian high or a London high or low or a previous day high or low. All of that can be used in, as time-based liquidity, right, with your narrative. If it doesn't fit your narrative and it doesn't make sense that it could happen, like something that just I don't know, like for us to just fall like the CPI day. The CPI day short made sense. But like if we did it Wednesday, like the day before CPI, like obviously we would never do that because it just doesn't make sense. And like you saw into the day before CPI, we just accumulated a whole bunch, and that's usually what ends up happening. Does this make sense? Right, like bullish order blocks form with the short form liquidity pool above it.
Yeah,
Okay, because like even like this order block here, right, you see right before we'll try and use a 1 hour, right? We'll just use this whole like accumulation block right here, just for example, because it kind of looks a little bit messy, but right, it's just an Asian and London accumulation into a New York expansion, New York reversal and expansion, right? We just accumulate, manipulate, and then distribute higher. But right, if we labeled it, think of this about an order block and right, having an SMT down here as well. Right, to make this order block, right, we got to sweep the liquidity above it. Excuse me. Sweep the liquidity below it, and then, right, look for the liquidity that's formed above the high. And you'll see that a lot of times when we do form, like even on the lower time frame. Right, even like here after we create a swing high and then come into a retracement, right, we wick and then close back within the range and then form an order block, right, and then accumulate, manipulate, and then react right back to the order block and then deliver higher. A lot of the times that's how you'll see the order block form, even like this, right, our black candles created for our previous swing low, right? We liquidate it with the next, and then with the next candle, and then we wick, close back within the range. And even if we don't close above, like you see here, a lot of the times you'll see me in trades that look like this, just because of the way that we've swept the previous candle, liquidated the low, and then returned back within the range. And I know that that's gonna indicate either a solid retracement above a previous high. Say if we're in a deep discount like this. Honestly, I wouldn't be trading PM session after a day like this because we've already moved a lot, and I would try and catch short, but it would just be a little bit more difficult in the PM session. But you kind of get on what I mean. If it makes sense for the trade, right? In narrative and just for everything on the 5 minute, 15 minute, and even down to the 1 minute, you'll see a lot of the times that we'll do that. Right, sometimes we'll create a rejection block, and it just depends the time of the candle close and how we react to it. And like ones like this, usually sometimes I'll be able to get an entry into the wick, but on the 1 minute, right, you just want to look for a close above it, and then you see we react to the order block and then deliver higher. Same thing here, right? We wick the 1 minute candle, liquidate the low, right, and then close back within the range. A lot of the times you can treat this as your order block, because what do you see here on the lower time frame? We saw within the higher time frame, right, how this was just our retracement, so an accumulation, manipulation into a distribution. What we see here is our Romeo 3 candle method, right, where this candle acts as our range. We manipulate the range, liquidate it, and close back within it. And then, right, we can either use this wick or the candle as our order block and then have our stop below the low, right, and then aiming for this high. And, even if you're getting in at like a little bit of a worse entry, like here, right, you still have a, right, 3 RR. And that's with like a, pretty easy, I mean, that's 200. We were just moving a lot this day, but even then, that's a easy 200 ticks, especially when you know we've expanded and we're going to keep expanding. And that's going along with like your daily and weekly profiles as well. Especially like for a Friday. Honestly, Friday was pretty tricky, but like in a more high probability day, and you see these like Friday was tricky. Obviously we were delivering, and then from an accumulation, manipulation, and distribution. But honestly, I didn't think we'd reach previous day high, and we did on ES, and then so coming into that SMT, right, a retracement was warranted at the end of the day. But it's kind of hard trading that when, ES is just, climbing. It's kind of hard to just take profits and then, be able to get into the short as well. But I wasn't even trading Friday for real. But I traded like the Asian session. I just woke up late and then caught like a little long to the 4 hour draw on liquidity, and then I was fine with that. But that's also another thing. Draw on liquidity is super important. Where is it? This is a good checklist, like, to be able to have. Just understanding like draw on liquidity, and like I've talked about, right, also with like power of 3 and understanding, right, when we've accumulated and manipulated outside of the range, and when you just know we're going to distribute inside of it, whether it's just to the 4 hour fair value gap, and then we use that as for a retracement, or if it's deeper into the displacement that we used for CPI. You got any questions so far?
No.
Okay. I'm gonna get into this and then get back into the chart a little bit.
Yeah.
Actually, let me make sure. And that's another thing, right? High time frame sweep on liquidity, like we showed earlier. Order block and rejection block is created, and then we can expect that high or low to be left as, high or low to be left behind. And what I mean by that is, like, on one pair, if we create those equal lows, and on another we sweep and then, right, create our CSID and then start to return back within the range, it's okay for those equal highs and lows to be left. I know we see that on the draw on liquidity checklist, but if you're targeting equal highs and lows above, or even low resistance highs and lows, it's okay to leave equal highs and lows if we formed an SMT. If both pairs create equal highs and lows and they're very obvious, we'll probably go ahead and sweep them one more time. Go ahead and sweep them one more time, and then, right, return back into the range. Right, it just depends, right, what type of structure you're looking at, as well as what time you're looking at the market. Very key point into that is looking out for a lower time frame SMT inside of the higher time frame SMT. As well as you saw here, right, inside of our 8 a.m. manipulation, I think let me pull up the chart. I wouldn't technically call that a lower time frame SMT. We just have the higher time frame, but yeah. A good example of that, though, is back here. Right. You'll see this a lot of times where we have the higher time frame SMT below this low. And we used this delivery, right, to almost form our analysis, right, from every retracement that we've had. Especially delivering from this retracement. And as soon as we've, reacted back in a bullish manner, right, from this order block, FEG, and this protected low, right, you know that this high and this high are going to turn into low resistance. Especially like this day, this Wednesday, we caught some pretty good longs into the manipulation into this higher time frame fair value gap after we accumulated overnight inside of the range. And even if we like wick out right the high, it's more important that we close back within the range, and that kind of confirms our higher time frame accumulation here into a manipulation than to a distribution above all-time highs. And the reason it's important that this is all-time highs, this is because we're bullish, and a lot of the times we'll just keep going up, and even if we've displaced, like we saw here, and formed a bearish bias right to this low, that SMT and then the displacement right back inside the range can confirm that that this was just a retracement and that we're going to start delivering higher. And a lot of the days that you're unsure, right, you can kind of just skip out of those days and then just trade them, or excuse me, just paper trade them or demo or eval. And then right, especially on days like this Tuesday where we've created a very obvious London low SMT for a New York expansion. So we have that Asian accumulation with our 6 and 10 a.m. candles with our inside bar, and very obvious CRT here. Also, good lord, oh, that's the fucking wrong button. Right, very obvious equal highs, and also our CRT candle, right, and the lower time frame inside of the higher time frame SMT. We saw NQ sweep this low and NQ sweep the previous day low, right, creating a Tuesday low of week for a classic buy week, into a Friday right high of week. Yeah. And ES left Monday low a week. So, right, that gives you a pretty good bias into Tuesday, especially into the New York session, right, knowing we had that London reversal. We're going to leave this London low behind, and then we're going to keep expanding. Right, you have two equal highs above here for a good take profit inside of a long wick, and then, right, we also SMT'd into this 4-hour fair value gap here. And it wasn't a very hard SMT, right? We probably came up, on ES, right, just above here, just kind of almost creating relative equal highs and inducing more liquidity into the market. We retraced. We didn't quite touch that 4-hour order block like I would have liked to, but we did, right, create these low resistance lows, right, and then come into a previous day with our. I know it says Wednesday, but it's the 6 p.m. so it's the Thursday. It's the Thursday Asian trading session, so it's the next day. You know what I mean. So we sweep that into a higher time frame fair value gap. So we accumulated, manipulated, and then now we're gonna distribute higher, right? And then take out this low resistance with these two equal and relative equal highs, and more than two, honestly. You can use all of 4 of these, but right in this moment here, inside of the 4-hour. Right, we used it as an IOFED to return lower, and then used all of this later as low resistance. So you have to understand, right, after we've delivered from this Thursday reversal, we're going to keep expanding Friday lower. Oh damn, that was all Thursday. Right, so yeah, even into Friday, we're going to keep continuing lower. Right, London reversal with our 2 a.m. candle. So we accumulated in Asia, manipulated in London, delivered. And it was a pretty shitty session, right? But you can see we wicked up during the 10 a.m. session, right? And even probably could have caught a delivery from this order block here inside the 6 a.m. 4-hour candle. Also inside of the 10 a.m. open high low close, but it wasn't the cleanest delivery on Friday. You could have maybe caught like, something short, but it wasn't the perfect delivery. But right, this Tuesday was very beautiful, and that's what I mean. Like on Mondays, yeah, like this Monday, right? We just expanded lower and then created the SMT. If you're not, super sure that we're gonna keep expanding, right, coming from next week into this low, right, you can just maybe sit out a day and just watch it, but. Right after we form that, and then you wake up or whatever time you trade into the London, and you see that SMT there, and then we close back within the range. And I know at it takes until 6 a.m. for the London candle to close, but a lot of the times you can anticipate that, right, because of the weekly profile into a Tuesday reversal because of the higher time frame SMT. Like a lot, like you see this 4 hour candle, that's the 6 a.m. one into, right, what we saw into an SMT, right, with this low into a higher time frame fair value gap. And as well as anticipating the 9:30 Judas Open. And also, right, leaving London's liquidity above. And also, it's Wednesday, so it's going to be a classic buy day from a Tuesday and Monday, or excuse me, from a Monday low a week, but a Tuesday, right, reversal either at London or New York. And it's not always going to be one or the other, right? We see here how we showed with our order blocks, right? We liquidated that low, and then created and closed above, and then created the order block, and touched it to the T there. But right, you saw that higher time frame and lower time frame. So after seeing signatures like that, we're gonna keep running to this high, especially right, just leaving wicks that will fill and then expand to all the way up here. Yeah, we kind of talked about all that. I'll quit yapping about that. But my main thing is like psychology, because if you're able to hold on to the trades that you're confident in, that's just only it's gonna bring you more profit, but it's gonna get to a point where it's gonna consistently raise your RR. And if you have a 5 win rate, that equals only, I mean, that equals, you can have a 20% win rate with a 5 or with a 5 RR. And it can be even lower if you break even. Like say you can have like a 15% win rate with 50 with like we'll say like a 40% or even 30% break even mark, and like a really high loss percentage. And obviously you don't strive for that, but if you can handle that like mentally, it becomes a lot easier, because it's like, damn, bro, I can lose like 50, 60, 70% of my trades, go break even on 30, 40% of them. And it's not just break even after 10 or 20 ticks. It's break even after, your rules and conditions have been met. Especially, like we hop on the chart on a lower time frame, right, after we sweep these lows and then close above them, right, that's, a good break even point. On this trade here, right, into the Asian session, right, it's Asian session, so I expect us to accumulate and go slow. I'm fine with that. But at this high, we actually had created an SMT with this high, and I just didn't, one, like how it looked with all the wicks with the previous day on Thursday, and also that's our Asian session high. So if we go back on the replay here, let the thing load real quick, right, you see, well, it's the 8, but these dashes are the Asia high and low. But we can see that it goes a little bit above here during 7 o'clock. So either way, I still count it. But we had an SMT. So to me, right, in the 1 a.m. session, kind of going into the London Open, that's enough for me to kind of take most of my profit, and just be fine, because that's only, I got a good fill up here, like above these highs, because I was still paying attention. But right, it was only at that point like 70 ticks, and I know that's like a good amount, but just depending on where you got your fill and what you were trading. Like I was only trading micros at the time because it was Asia, and the amount I took out, it was probably only like a couple hundred extra dollars compared to, right, the amount I was already up. And so to me, one, the time-based Asian high had already been taken out during the London session, so I knew a retrace was imminent. And also I didn't want to stay up that long. Either way, if I stayed up, like like I was in at previous day low, so my break-even point didn't get hit. But right, you see, we still barely didn't touch the Asian high. But right, with ES up way like above here at this point, either way, you got to take profits at some point just because, of the SMT above the time-based liquidity, and you're coming into a PPI news. So, right, even if you're like just coming into the news, you start to see this pre-market accumulation into the overnight accumulation, and I know we manipulated down here, but you see higher time frame, we just accumulated within the range, right? We closed back within. So it makes sense for a big news event such as PPI to accumulate, manipulate, and then distribute higher. And that's exactly what we did within the news event. And we also waited, no, I thought we waited to the 10 p.m. candle. But, right, we see with the 10 p.m. candle, we got our open, right, quick retracement lower, open, low, and then high, and then just continued to close above. Um, Actually, we might not have closed above with that. Oh shit, yeah, we did. Yeah, it just kept expanding. So you see how that also follows into the method like I take a lot of my trades on with the 8 a.m. manipulation into the 9 distribution into the 10 expansion. And even if I don't know if it's gonna come in, sweep this low, right? If I'm not sure if it's just gonna react to this order block, um, right? Even if I'm not sure, right? If you're in the 8 o'clock manipulation below the low, right? You're still able to, be at such a point where you're break even that, you can continue to hold your trade, right? We've created equal highs here, and we probably, have like an hourly fair value. Eh, that would have sucked there. I mean, you already would have took profits somewhere into here, so you probably just would have been waiting for like this breaker, or order block here to take more profits into the 10 open. Yeah, and we touched there. Um, but we also, right around this time, had our SMT above previous day high. So, when you get to the point of being able to hold those trades for the whole day, you just have to know when to be able to take profits, and when like, hey, it's not worth it to, if ES is already above this high and we formed an SMT, it's completely not worth it to hold profits. And that comes in with your RR and psychology and just, putting it all together. And then, right, a big thing for me is 2 and 3. They kind of go hand in hand. And a big thing's like on and off the chart, right? Even if it's like making your bed in the morning or, rolling into like what I say all the time is like, I like to set rules for myself, like make the bed in the morning, do certain things in the morning and make sure I'm ready to go before I hop on the chart. And that's going along with accountability. Like, if I don't hold myself accountable and do that stuff before I hop on the chart, how can I hop on the chart and hold myself accountable to the rules that I make, if that makes sense. um and even then, before you hop on the chart, you've kind of built up some confidence, accomplished some goals in the morning, like made your bed, even if it's like just brushing your teeth, getting some food in you, like doing a couple push-ups or whatever. Whatever it is, right? Just setting rules for yourself to do and then holding yourself accountable on and off the chart is, the most important thing, because the more you can hold yourself to a set of rules, and I know it's like boring. You don't have to like set boring rules all the time for yourself, but and you don't even have to set rules all the time for yourself. Just very important rules for certain key times. On and off the charts when you'll be free or you'll have spare time. Just stuff like that, and it all just adds up over time. Just day in day out of doing it over and over again. Um, you almost just, I mean, you really like, as corny as it sounds, you really feel like locked in, like you're like, damn, like, I can do this, like I do this, like, like, I don't like, I'm young, but obviously it's crazy for like a young person to, be super confident in something like such as the stock market or like even futures or like, because it seems so daunting, but at this point now, like it's like, I do this shit like daily, like I know what I'm doing. And it doesn't take long of doing it every single day to start to feel like that, right? Once you're putting the right type of work in, right? You can also do put the work in, but it'd be the wrong type of work you're putting in, like the work you don't need to put in, and just end up wasting a lot of time. And then that comes into technical analysis. Like, I know for you, right, this isn't going to be number 4 because don't have the confidence, or, well, excuse me. You may not have the confidence in your technical analysis. Sorry, I didn't mean to say it like that, but you know what I mean. Um,
Yeah.
yeah, and it's okay if you don't. Like, that's perfectly fine, right? But over time, 4 and 5 also go hand in hand. And like this should be at the top of your list, but at the same time, you know, uh, once you get really good, like once I got really good at this, I had none of this, and I would start getting on fundeds, and I was like, like sweating and shaking, bro, like seriously, because I knew I was like, I knew I could, sit and wait for a trade and be patient and whatnot, and once I started doing that, I kind of knew I had the power to do it, and I would like damn near sweat, shake, and just kind of make bad decisions. And then, I'd get on a paper account and it'd be like, damn, like why can't I do this, on a normal account? You see that a lot of times, and it's literally all mental. So some of these rules can be switched around just depending like where you are and how you feel, but long term, like that's what kind of helped me. Um, I mean, you kind of understand. I'm not gonna sit here and gap the whole thing, but I mean, sorry, I had to get a drink of that drink. But I mean, you know how it is. Like you could be 2 green months in a row. Like you just flying, on the top of the world in one day. I mean, you saw. I don't know if you saw, but like Lanto, one day or like one day took away from shit, I don't know, probably like half a month of work. I don't think he blew all of his account, or even, I don't think he blew one account, but like he, took away a lot of work, and he's been doing it for months. So, it can happen to anybody. It can happen to me. It can happen to Crunk. It can happen to seriously anybody, because it takes one day of, hopping on in a bad mood and just trying to catch a quick trade. You go from wanting to catch one quick trade, like being in and out, going away from your regular rules, just, thinking you can have a normal, easy day, like, hey, I'm gonna hop on here, do this, and just get off. And then that goes from shit, you're in one trade, then you take 2, take 3, take 4, and shit, all of a sudden you've taken 40 trades and you're down, a whole bunch of money. And that literally happens to, that can happen to anybody. It happens to me, it happens to fucking everybody. Um, but yeah, these go hand in hand. Yeah, I'm not gonna sit here and yap all this. I made this shit a long time ago. I've said it so many times it sounds corny now, but um, right, you gotta put the work in, put the time in, as you probably know, man. Like you said, you were doing. Didn't you say you were in school for? Hold on, I want to get it. I swear it was something nursing, right? Or am I?
Nah, bro. Med school, med school.
What'd you say it was?
Med school.
Uh,
I'm gonna be a doctor.
oh, med school. Oh shit. Damn. I knew it was something medical, so I thought it was nursing school. But I knew you said something medical. Damn, I didn't know it was that though. That's crazy. Holy shit. Yeah, so man, you definitely. I mean, you know how the grind is. You understand how it is, man. Holy
Yeah,
shit.
yeah.
How many years have you like been in school?
It's been 4 years, and the next year will be my final year.
Holy dude, oh my God, you're way smarter than me. Congratulations, dude.
Nah.
Holy
Thank
shit.
you, thank you,
Dude,
thank you, man.
I didn't know. Oh my God, I didn't know I was talking to a doctor. Holy shit. Dude, congrats, bro. Seriously. I know that. I can't even
Thank you.
imagine the amount of work that takes. Holy
Yeah,
shit, man. Congrats. You just stunned the hell out of me. Oh my God. Wow. All right, let
thanks,
me
man.
let me take a breather. Hold on. Holy shit, dude. If you don't mind me asking, how I feel like I've already asked. You said you were 20 something.
I'm 23.
23, yeah, that's right. I feel like
Yeah.
I was gonna say 24, but I feel like I asked. I don't mean to ask questions so many times, but I get asked so many questions. It's like, or I might not have asked. I'm scrolling through just to make sure. Yeah, but anyway,
I don't think you asked about my age.
oh, okay. Yeah, man, I swear I hate asking, questions twice because it seems like, I don't care, but I definitely do. But that's like amazing, man. Holy
Yeah,
shit. I know who I'm calling, man. If I ever get an injury or something, if I need surgery,
man.
I know who I'm going to.
Yeah, sure.
But yeah, like you know, uh like we said, that got me stunned. I can't even speak. But yeah, the main thing as well is like once you understand the main concepts is just chart time, chart time, chart time. And I know it's hard, especially with what you're doing to be able to get that chart time. Um, but even if it's chart time over, a year or 2 years, right? It adds up 100%. And then that comes into time of day, which I think is super important. Whether I don't know exactly what what you like to trade. For me, it's NQ, and I understand the times completely. I know exactly what I want to look for when I want to look for it, because it's not it doesn't play out like a pattern, but to the point now, it's like a pattern to me because it's the same, it's the same signatures and price happening completely different ways, from time to time, but it looks the same to me because it has the same narrative, has like the same background speaking. It has, the same kind of reversal idea behind it. And that's the kind of the whole key point behind it, right? You want to know what you're aiming for liquidity wise, and that even kind of went into the Asia trade. How I was talking about the Asia high, or into the like 1 a.m. trade, which is technically London, but you haven't gotten to the London Open, but right, you're aiming, right? I was aiming for the Asia highs, expecting, right, a London reversal into a New York expansion. Um, but I kept in mind that, we had that 8:30 news, so I knew at least EQ of the 4-hour range that we had created was pretty much not guaranteed, but I knew it would. Honestly, in my head, I knew it was guaranteed. But I left runners trying to be greedy, thinking we'd reach the Asia high before 8:30. And you saw how we created equal highs, just pent up more liquidity and then used that 8:30 news to manipulate lower and then drive us higher. And that comes into, right, higher time frame and even in the lower time frame, they simply won't work. And then the lower time frame PDAs will start to, shoot price when you are, withdrawn liquidity and order flow. And order flow comes into higher time frame, how I'm talking about we're bullish. And this was a very, what day was it? This was a very strong, order flow drawn liquidity based trade right here on this Wednesday. Right, when we took this one, right, we knew just the draw on liquidity was higher, right? We knew, the weekly profile with the Monday low, and I'm pretty sure we had SMT'd on Tuesday with with ES. But even if we hadn't, right, we see how we reacted. We liquidated this candle's low, closed above, liquidated and closed above. We see us creating breakers and higher highs, and then higher probability order blocks by accumulating, liquidating the lows, and then right, closing above with our right correctly time-based candles. And that 6 a.m. 4-hour candle aligns into right, the 8, 9, and going into the 10 a.m. candle. So that's where you see a lot of your 8 a.m. manipulation to the 9 distribution, right, to our 10 a.m. expansion. But for our 10 a.m. candle and expansion, right, we have to have our open, low, high, close. Because that goes into your afternoon session and into the lunch session, which can sometimes be choppy. But, right, even during a lunch session, let's kind of zoom in a little bit to see exactly when it happened. Oh yeah, we saw it. It happened right after 10 a.m. Right, we saw our open, right, low, and then quick move higher. And then let's see. Yeah, quick move higher, and then right, we just kind of see lunch not do anything compared right to the movement here, and it doesn't even break right our previous low and this order block low, and shit, damn near where our original entry would have been. So let's say if you missed this order block, right, it was just a really solid retracement right back to probably a 30-minute order block, or even a beautiful retracement to the I think it's pretty close to the body, damn near touching it. I think it's touching the body of the 30-minute
Yeah.
order block. It's like right on it. So that's, a beautiful retracement. And then also right, liquidating the previous and it's not a swing low, but it's our black candle on the hourly. So it's, a black candle, and it can technically be a swing low, right? But it liquidates that previous hourly low and then drives higher into the lunch session. And if you're in, like I try and show how my trades I like to take. If you're in from that 8 a.m. session, right, you can easily, right, be able to, I think that's Tuesday and then to the Wednesday. But yeah, going in, yeah, even like this one, right, if you're able to catch that, 6 a.m. low, right, you can easily be able to catch, the low of day. And I think this low of day happened right at 9:30. I can't remember. Yeah, I think we like accumulated. Let's see. Yeah. Right, and this came in right into a pre-market 8 a.m. right, manipulation into 8:30. We see into our 9:30 expansion, and we also see a lower time frame accumulation here into a manipulation. Our low is protected here because we have an SMT. We've created a CSID and closed above here, right? We just have a retracement back, or and this is what we call our anticipated failure swing. A lot of people get stopped out and get scared here because they think we're going to keep running lower. Because it looks like we're falling off the map. We've broken this high, maybe even had an SMT above this high. It also looks like we're accumulating, manipulating, and distributing. But like we saw, it's just just pretty much a double accumulation, double manipulation power 3, right, with the lower time frame accumulation, manipulation, distribution, and the higher time frame, right, closure back in the range very quickly. Right here. 5 a.m. candle closes here, and then that's above our previous swing high that we have marked out here. The 5 a.m. closes black and down here under, right, coming into the pre-market session, so we have no closure above, so it's a higher time frame accumulation into the manipulation below this low, into the fair value gap below, SMTing as well, and then delivering higher. And you can also see how that would deliver into a market maker model, right, with your original accumulation, first leg, into a right, smart money reversal, into a higher time, or like a larger accumulation, and then even here, right after we've distributed past the high and we have accumulated again and came into the breaker fair value gap, right, we're going to keep expanding higher because it's a classic Wednesday buy day coming from, right, our lower time frame market maker model here, or excuse me, our higher time frame, right, with our smart money reversal, accumulation. We have our first leg accumulation, right, and our break above. Technically, this can be your second leg, and then this is your manipulation. Or you can just, right, see it as another accumulation, and then you're sweeping your first leg accumulation. But if you see this as a second leg, it makes you more confident, right, in sweeping this low, retracing back to the order block with a higher time frame anticipated failure swing, than to deliver us higher. Because you also know, right, we've accumulated, manipulated, and then distributed. And yeah, that's what my key point was, is that 4-hour 6 a.m. candle. Also, right, if you're trading the London session, right, you can see as well, right, how we've swept the 10 p.m. candle, right? And you know we're gonna manipulate lower, right back into the order block, right? So for London, right, you can catch that manipulation up, and then right catch your lower time frame manipulation down. Say if you can't trade the New York AM session, but if you almost if you master power of three and just time-based liquidity, you'll understand right just where each candle is drawing liquidity almost will be, whether it's in an Asian session, which I don't recommend because it's slower and it's harder to learn, and or um mainly the London and the New York AM session. You can also use the PM candle, but right as you can see in this instance, it's short and kind of small. Right, another instance, right, short and kind of small. But right, if we're delivering from a New York expansion, right, from a almost a overnight right London manipulation, right, because we right drove higher then manipulated lower, right, into our New York reversal. Either or, right, you could see your London reversal right into a New York continuation, or you can see a New York, excuse me, an Asian accumulation like we saw here into a London uh, higher time frame manipulation, but into a London right accumulation manipulation distribution lower, and then right have the pre-market session liquidate that London low into your reversal, and then have that expansion all in your New York session, which you saw here, right, with your 10 a.m. liquidated London and Asia high, right, and then also our previous day lunch liquidity, or not previous day, but previous week into Friday. Um, oop. I haven't gone over a lot of market maker models, but right, even on the 15-minute, right, you understand that you see your higher time frame. Take that off and then
Uh,
just put that there. Monday. Right, so you have previous day high, resting above, right? You have the higher time frame SMT, so you have a protected low above, low resistance liquidity, and coming into the pre-market session, right? We've accumulated, and even right, we see into the 8:30 candle, we get a good right manipulation right back into the order block. We'll just put this whole wick on here like this, right? Because we have a fair value gap open, so we want to see. We know the wick will get touched. The body's not guaranteed. It did get touched, but the body's not always guaranteed, right? When we have an open fair value gap, a high probability order block, and a decently long wick, where we can see it's not super long, but it's damn near a 1-to-1 with the body of the candle on this black one. So, right, it's not guaranteed, but it just depends. That's sometimes situational, honestly, because the wicks sometimes can uh like even on NQ, like if I went to NQ, like this wick might have not touched it, right? We might have missed it by one, like 1 or 2 ticks. So that can, you can sometimes risk that. And just knowing that this, will be tapped, and like this, even to this low, won't be rejected, because how we've reacted, right, and closed back within the range. We've accumulated, and we've also noticed that our 6 a.m. open, right, was in here. So for our 4-hour, right, it makes sense for us to open low, high, close right into our right 6 a.m. 4-hour candle, and then we also see right our 8 excuse me, our smaller time frame, right, 8 a.m. candle, right, we open and then manipulate lower, right at 8:30 into our order block, and then deliver higher. And then right we see into, yeah, we didn't even manipulate for this one, so we had our 8:30 manipulation, 9:30 expansion, and come into 10, right, we see a very quick move lower into the breakers, show efficient price delivery, right, we've wicked above, and honestly, like, this looks like a really clean market maker model, Right, you see your higher time frame accumulation, right? Your smart money reversal here, higher time frame accumulation into your manipulation leg, and then you just use your 15-minute right accumulation legs. And I know this high looks high resistance, but right, all we were doing right is just manipulating for our London session candle to then deliver us lower, like we saw in the 4-hour. And you'll see, like, this isn't a pattern, but you'll just see this same type of price movement and price action, liquidating certain time-based highs and lows, and then delivering, to order blocks. Right, if we look on the 1-hour, right, and it's right, see, like here we barely missed it. And right, open fair value gap, and like I know this isn't the technical order block, but to me, right, how we've talked about liquidating that previous candle low and delivering right from our order block over here, right, it makes sense how we could put this in as a high resistance low. Right, even the 2-hour, right, sees it wicks, closes back in the range, accumulation leg, original accumulation leg, right, break the high, reaccumulate, retrace, and then or excuse me, reaccumulate, manipulate, and then distribute. And then a big thing that I only use, right, time-based liquidity, I didn't mark it, but right, obviously, like, if you mark out this higher time frame range with this candle's high, right, wrong way, right, this candle's low, and this candle's high, right, we see we come into OTE, right, so we know we're in a discount, and even here we're in a deep discount, but even on Tuesday, right, we know we're in a discount. So everything in our narrative, we're getting good buys on Tuesday, right? Wednesday wasn't the best, but right within our range that we've created, not even there. Honestly, right, just knowing that we like Wednesdays, like I said, it was just mainly a draw on liquidity and order flow trade. It would be, I mean, like when I was newer, I definitely wouldn't take a trade like this because I wouldn't be sure where we'd retrace to. But the higher time frame accumulation warrants us to not retrace, just manipulate. Right? A retracement, could be all the way back down to the breaker. But right, with the higher time frame high, the longer wick that wants to be filled to and through, and right, our low resistance lows, and the higher time frame market maker, the higher time frame SMT, and with the lower time frame SMT inside of it, right, all of those narrative speakings into right our weekly profile of a Wednesday buy day from a right ES, I think it was Tuesday low a week, so another SMT into a Monday low of week in Q, from a discount, right, delivering higher. All of these things combined make sense for a classic Wednesday buy day, right? To then, seek that London liquidity and not, use that London high to deliver us lower for a London manipulation. And then that's another time that we see, I think this was the one I showed earlier for the double manipulation, right? But we see the higher time frame, right, to this black candle, right, our 6 a.m. candle. It closes back within the range, right? And then we see in our 8 a.m. candle, right, us manipulate lower with news and then deliver higher for our open, low, high close. And bro, you could literally copy paste that every single day. It's sauce. Like I know so many people that just end up using that shit now because it's so free. And then that's a big ass volume imbalance. But a lot of the times too, like you see if we'll open on the 4-hour like that, alright, that's the 2-hour. But yeah, I knew it. Even if we open on the 1 or 4-hour like that, I wonder if the 4-hour got one. God damn. But yeah, you'll see a lot of the times, like, I know it wouldn't be super expected to have a big volume imbalance like that. Excuse me. But, I'm pretty sure it delivered straight from EQ, our OTE of, right, our previous time-based range. And how you look at your time-based range, right, is you, right, into the 10 a.m. candle, how we use the 6 p.m. candle, right? We just mark out the high and the low of it and use the range of it. And we see into the 10 p.m. candle, right? We one, have a fair value gap after, right? We just see our obvious, right? We created a breaker here. I mean, just our obvious order flow, right? Accumulated, manipulated. We've created a breaker here, even though, right, within this 15-minute candle, we technically closed back in black and back within the range. It's our higher time frame, open, low, high, close, and you can confirm that after, right, how we close back within the range twice. And then into the 30-minute of the candle, start to retrace and then deliver higher. We can also see that in the 5-minute. I can guarantee there's an SMT somewhere within one of these lows. Probably even this one, right? So as soon as we put that in, right, lows protected, you see these two highs put in, and you know we're going to keep needing to expand, right? Because it's a classic 10 a.m. expansion candle. My fucking mouse froze. So even then, right, you can pull out the, right, well, I already marked that, dumbass. Right, lower time frame. So you can either do it one of two ways, right? You see your 10 a.m. candle open. Say you miss your entry here, right? You see your SMT into the low. You can, one, either mark OTE of the candle, like if it looks like this is just a retarded news candle. So it's kind of ugly. But what you want to notice is with the news candle, right, we left a lot of liquidity above, right, because we haven't reached our target of previous day high, right? We just kind of wicked it once again, and left liquidity above, right, and we didn't distribute through the high. That's the main thing, right? We just kind of, just edged the high and didn't really distribute. We wanted to wait till 10 to open, low, high, and close. This one is just butt-ass ugly, but even if you, like, waited for an order block to form and then have that, like, this is only 5 minutes after news, so you probably wouldn't enter, right? You probably wouldn't enter like inside of this mess, just because we're creating so many equal lows, right? But we liquidate the candle bodies low, right? And if we've SMT'd, at the news candle, there's no reason to liquidate the data low, right? And then that's another thing from our drawn liquidity checklist. Where the hell is it? Yeah, news, right? Well, that's not very, right? So our news highs and lows are very, strong draws on liquidities. So if it's been SMT'd though, right, into our fair value gap, right, from our high probability order block with ES, there's no need at all to keep sweeping it or to sweep it again, or not to sweep it again, right? This low swept this low, so there's no need to sweep the high resistance low. And the high resistance low, like we know, is put in after we sweep, right, a lower low like this, sweep it, right, turn back within the range, right, and we've made that narrative clear from delivering from here, which we saw a higher time frame where it was delivering from, so it makes sense to keep delivering higher, right, with our time-based ranges and our drawn liquidity above the London high. Right, so this news candle manipulates, right? It manipulates upwards first, right? And then manipulates downwards. It manipulates upwards to draw more liquidity on the upside, then manipulates lower and creates the SMT. So it's a double manipulation, and then what we do is we come back into a deep discount of the candle range. I'm gonna check and see if we SMT'd. What day is that? The 3rd. I'm gonna check and see if we SMT'd that low.
Yeah.
Oh, that's the 5th. Oh, here we go. Yeah, so all we got was our SMT on the news candle, right? SMT here, no need to sweep this candle low like we were talking about. So, right, on both pairs, we still have the news liquidity of the high above, right? Don't break it here and don't break it here. Um, well, we do break it on NQ, right? But either way, on the 1 minute, right, we see we're still within the news range, and it's okay to trade it because we've left equal highs here, and right, we've broken the range on the on one pair, right, and left liquidity above, right, with the high. So it's okay to either take this trade here below the low or wait till the order block's formed, right, and take this with your stop below this low or this low, depending on how much risk you want to put on. Right, and then we see it deliver to our um, our low resistance high, right, and then you're still in, stop free for the whole day, and it just keeps running. And then that's where it comes in psychology wise. How do you know where to hold? When do you, how long can you manage to hold? Stuff like that. Um, yeah, and that's my main thing. Like even, when, where, and why. If I haven't said it, a million times already, right? You have to have your drawn liquidity, you have to have order flow, you have to have, all the things on your side, and then that's how you'll be able to catch the quick trades and, be able to be out of the market and, sometimes, whether it be a news candle like we saw CPI and, I caught the bottom of that into the high and then I was just done. And I know that was a very small piece of the pie of what we got Thursday because we got short, but honestly, for me, I was fine because I haven't had it's been a news candle or two since I've been able to just like, take it and then be out. So I was fine. But right, once you see that low or high put in and it becomes high resistance, just follow the path of least resistance, right? Low resistance liquidity just gets spooled through and it just, price flies through it. Keeping in line, right? It's, time frame alignment is just how you look at the chart from a top-down analysis, right? We didn't see me, trying to use just the 4 hour and the 15 minute or the 1 hour and the 5 minute and the 1 minute, right? We kind of saw me using all of them in conjunctions, even the weekly, like looking at the weekly highs and lows, looking for an SMT there. Right, just adding all of these things into, you know, uh, almost just an unlosable strategy when you have the psychology and the mentality to be able to stay patient and take only the perfect trades. Um, and I know it's a shit ton of stuff, but it's super simple once you just pound it in your head day after day and day after day, and it becomes the back of your hand. Like this list. You literally like you. I mean, you've put notes in before. You just look at it and shit. Probably with the human body, you probably know a million things just off the top of your head that I would never even think of. Um, so that's just how you have to be about the charts too. You just know everything. But it's with coming along with knowing everything, it's because you've probably wrote it down a million times, studied it over and over again, and also because you have the IQ to be able to just inherently do that. I know that sounds stupid, but you'd be surprised. Like it's kind of crazy, how much information slides out and how many times questions are asked over and over again. I've not talking shit, but I've had one dude ask me the same question. I shit you not, probably, dude, I swear it's been over 10 times. I just don't know how to answer it anymore, and I feel so terrible. But yeah, do you have any questions? I felt like this was pretty good. I was like back and forth. Sometimes I stay too long on this, but I feel like I was able to kind of hop back and forth pretty smoothly and kind of show all I wanted to show. Um, but yeah, do you have any questions or anything, homie?
But right now, no, bro.
Yeah, I know probably after you got a good, I missed like 20 minutes of the first part with the SMT. I'll just go back here at the end and make sure I get you all those notes for the SMT just on video. But yeah, like we talked about, lower time frames inside of the higher time frame SMTs, right? And then, if we're manipulating in a London session and have that SMT there as well, like we saw on that one trade, it's just like bam, boom, like there's no way you can't take this trade. Oh, and you know what? We saw that. That's what I did when let's exit this. Go here. Oh, fuck that. Right. That's what I was almost anticipating here. Right. We see this. So take this off here. Right. When I got in long at previous day low, right, doesn't this look eerily similar? I know we didn't break this low, and that's obviously why news did it. Right. Coming into the 8 a.m. news, we see us sweep this low. But it looks eerily similar to this right. That's not Tuesday. Oh no, that's not it. Sorry, I'm tripping. Yeah, it looks eerily similar to this though, right? Where you see, Asian accumulate, right? And then you see your London candle come in with that open low high close in the 4 a.m. And that's kind of what I was anticipating there with, because I usually, I'm always preaching I trade New York AM, New York AM, but right, sometimes I can, you know, I always hop on the chart before I go to sleep to just kind of anticipate what the morning will do. But right, it's not a pattern, but right, these had the same exact narrative. But as you saw on the other one, we didn't sweep the low, so that's why we didn't have a need to keep expanding higher. And then coming into that news, right, all we did overnight was just accumulate inside of the range. And then for news, we came and swept that. But right, this news, I mean, this candle didn't have a news, a news event during it. So that's why we just, have a smaller candle here, right? And then we still manipulate probably during our 9:30 or 8:30 open. At most likely our 9:30, since 8:30 didn't do anything. We'll zoom in and just kind of show it for since we're on topic with it. Right, yeah, we see 8:30 accumulate, manipulate 9:30, right, with the Judas open, all right, accumulation, manipulation, and then distribution into 10. And then 10, right, we see a little dip lower, and I don't want to say I can guarantee we don't break this low, but that's how you want to see price move usually, is we don't break the 9:30 low we put in. And I know it's like 9:40 or whatnot, but it's the move that was created from 9:30. So you would like to see it deliver higher, and even with this high put in, I would be very confident. Not that I would enter in here, because we're in a premium now and you had such a better entry down here, but I would be decently confident that we would just keep delivering higher. And, that's why I said I wouldn't enter up there, because I'm confident it would keep delivering higher. But as you saw, we just souped it by one tick. So say you just happen to just, I don't know, enter for just, market enter for some reason and then put your stop below the low. That's why you can't always do that, because, you do see our 10 a.m. open, high, low, close. But like I said, if you're in a position from here, and even here, back into the order block as we see on the 5-minute, like that's a very solid order block entry. And, as we see, no fair value gap, right? So we're at the body, beautifully taps, right? And then delivers higher. Your stop would be break even here. And, coming into the 10 a.m. candle, you don't even got to worry. You just kick your feet up and wait till about, I don't know, we'll say 12. Oh, shit, 12 already passed. Well, damn, look at that. You see 12, right? And that's because it's the second hour. You've seen how we've been talking about the 30 minutes of candles, like the 8:30, right? That's the middle of the hourly candle. So what's 12 of the 4-hour candle? It's the middle of it. And usually you'll see a reversal into a retracement around that time. And I wish I would have stopped on 12 over here, but you see kind of the point that I was putting in with, 12 being, it's kind of crazy how it's the exact high before we retrace, but you know what I mean. And you could kind of put that into your notes for like your hourly candle, even into like your 4-hour
what time
candle.
is it, bro?
What do you mean?
At what time you said that you expect a reversal or a retracement, right?
So yeah, so right, you know how you see the right, so here at 9:30 we get our manipulation lower for our Judas, our New York Judas Open, and we had no news during 8:30. But you saw in the other example when it was at 8:30 and we had PPI, and then we saw it liquidate that low, it manipulated a lot lower and then distributed higher. Usually in the two like 15-minute segments of the hourly candle, you'll see that reversal. Also inside of the 2 hourly candles inside of the 4 hour candle. So right, you have hour 1, hour 2, hour 3, and hour 4. Hour 2 and 3 is where you'll see that reversal, usually inside 15 or minute, right, the second or third 15-minute of the hourly candle, right? So you're kind of just, you're adding the high time frame into the low time frame, and that's kind of what I'm trying to that's what I love to push, all around on the chart is, you'll get more and more confidence with, a monthly, weekly, daily, 4 hour and these higher time frame analyses into your lower time frame. And then, even like we saw, right, this is your break even point, right? Say you took some at 12 and then you had one con left and you just put it for previous day high and, just maybe hoping Tuesday could keep expanding into the PM session. And I don't know if you get it, probably 4 now. Yeah, but you would have got just your profit taken. You would have been fine. But you also see 1 o'clock do its open, low, high, close, and you'll see that for like 1:30 a lot of the times. 1:30 will kind of have a Judas swing lower, or right the open of the 1 o'clock candle. Coming from lunch, but that one's it just depends, right? With a structure like this coming into one, you can anticipate us to sweep the equal lows and the deliver from the breaker, and especially if we have an SMT. But it depends your structure and everything that you're looking at and have adding onto it. Yeah, I don't know. I don't think I got any more things to yap about. Probably a lot of smaller things I missed, but that was a lot of good shit. Yeah, but yeah, if you get any questions or anything, bro, let me know. And just send them my way, and I got your back, homie. I know you're man, you're doing your thing. So I know you got a lot of time before you finish that. Well, not even. You got like a year compared to the 4 years you've already been doing. But I wish you the best of luck on that, man, and if you've got any questions, bro, send them my way, cause you're doing a great thing just in general, being a doctor. So it's the least I can do. I feel like to help you out, bro.
Thank you, man. Thank you. For sure, I'll get back to you if I have any doubts.
All right, and I'm about to I'm gonna end the recording. Oh, actually, throw this picture on screen. You'll see this with a video I'll post on YouTube. But it's
Okay.
just going over right the candle ranges, and then right even into like our weekly ranges. Right, we saw like with Tuesday, right, that SMT with ES sweeping the Monday high, and then NQ having the Monday low of week. Right, it's kind of the same thing, and just anticipating a higher time frame CRT and a higher time frame AMD inside of the higher time frame market maker model. And honestly, like if you look at the recording and look at it back, you'll probably end up seeing a lot of these things in one inside of another and inside your chart as well. And it's not always Monday high a week or Tuesday low a week. Right? Even like for the CPI week, right? We had Monday low a week, which made it easy to buy Tuesday and Wednesday. But coming into Thursday, right, it was a better day to short because like even me, I longed, but I traded the manipulation of the CPI candle and it left a lot of liquidity below, right? So we had almost an easy reversal short. It just wouldn't have, you couldn't have caught necessarily the super top of it because, I looked at it a couple times. There wasn't like a perfect entry, especially because it's at all-time highs. And, everybody on Twitter, everybody who had a brain, everybody, like I promise you, everybody who had a brain was not shorting heavy on Thursday. So nobody like made $1 million just because it fell, because that's not the most high probability short in the world. So some people probably like Crunk, took different, shorts at different times and was able to catch more of it. But, nobody caught that whole thing because it was just, it was a very aggressive move upwards, and catching the top like that, unless you're like catching it live, is usually a lot harder. Like I caught the last top, but it was during like a obvious London, like a slow moving London, session that was just very obvious. But during a news candle like that, it's not bread and butter to catch it, the top of the candle like that. So, just something to keep in mind when you go back in your notes and kind of look at it over.